Jeff Killian, Chief Market Strategist for the Inside Technician. The time is now 9:51 a.m. on 2/2/2015. Mark to the market. Prices have hit and are exceeding the preferred entry at 1987. We are now officially short at the preferred entry at 1987 after getting through the 87.50 support on the 1-minute chart. 15-minute indicators are set up with a high probability trade to the downside. Target on the 1-minute chart, as indicated by two levels located here, 84.50 and at 83.25, looking to get out on a rally. Stop should be placed in the neighborhood of 3/4 of a point above the initial in the event that the trade goes against us. The accumulated volumes come in after the move to the downside originally took place and found an additional support below 87.50. Didn't pan out. A quick shakeout here to the downside. Prices turned back up, and now we're looking for the follow-through. The 15-minute indicators, looking at the chicken money flow here down into the ground, even below secondary through established at this point here. 15-minute level here at this point is clearly violated to the downside for a go. And once again, looking at the 1-minute chart, follow through here. We're very close to the target as we move into the lower side of the channel that's established here. Looking to get on a rally at 84.50. MTM 86, 85.75. ES near contract month 3/2015. $85.75, $85.50. Okay, where prices are trading back up. If they do not hold the 87 flat level, or possibly 87.50 for internal resistance, and begin to trade off of that to the downside, one would consider getting out of the trade to mitigate the risk. $15-minute indicators still remain clear. We'll see how prices react at the 87 level and possibly 87.50, 87.25. Once again, if found as resistance, holds that ceiling, prices should continue to trade to the downside. Institutional money trackers on both fronts, short and long-term time frame, remain clear to stay short. Approximately 4 minutes and 15 seconds left within the current 15-minute bar before closeout. Now this is the critical area where prices must find 87.25, 87.50 as the new ceiling level and trade off of that to the downside on increased volume, or all bets are off on the downside trade. Now price is 87.75. One could consider being out of the trade at this point with no follow through to the downside. Mitigate the risk. And look to trade another opportunity. 9:56 a.m. Eastern, 2:15. Now price is trading up. One would be out of the trade immediately. So there's a perfect example of getting in the trade at the right time. Trade turns around, moves to the upside, getting out of the trade with a half point, 3/4 of a point loss maximum to mitigate the risk. For those of you that have a larger stop, wider stop placed, you're obviously still good to stay in this trade, looking for the re-entry below 87 on additional volume. CMF with an uptick and then down. Any increased volume at this point that shows on the screen, on the radar screen, as increased distribution, selling pressure from the institutional people will push the prices down, and more than likely through the 84.50 level to get to 83.25. This will play itself out shortly. And there you have it. So possible re-entry if you are out of the trade back at 85 to the downside here, under the pretense that prices will blow right through 85, continue down. For those of you who had a wider stop, there was no need to ever be out of this trade. Hold time reasonable. There we have follow through 85, 84.50, and then 83.25 for the end goal target. Institutional smart money trackers remain clear to be short now, longer term. CMF with increased momentum to the downside at a negative 45.83, negative 43 to 45.55. Current value. MFI at a 14.68. An increase in volume at this juncture, at this particular level, would clearly drive the prices down. We have a 15-minute level at 1981 and 50, and that is more than likely what prices will hit and tap out. And there you have it. So one would be out at the 81.50 level on a limit order. In this case, the 81.50. Still time to get out before prices retrace back to the upside. That's before prices have a chance to retrace to the upside. Lock it in, 81.50 again, lock it in. There you have it, 81.50. Clear institutional money in at this point. Possibilities of price continuing to the downside are very real. A little sideways movement out of the CMF and MFI at this point. Long-term holders, you're clear. 1978.75, next target to the downside. That's 78 and 75. And there you have it, drawn from the 15-minute charts, extrapolated right in. $78.75 could have been taken off the table on a limit order. Very clear to see. Using the 15-minute levels and the 1-minute charts, exactly where you would want to be out to lock in a profit. So let's call it a day here at the 78.75, even if you're trading MTM right now at 1980, as we speak right now. You would have been out at 10:03 at 1980. Excellent move identified by myself here this morning. Institutional people, if you're looking to employ the positional advantage, going with the best of the best setups and looking for these types of opportunities to come your way, possible stop out here this morning. Plenty of chance to get out before prices went against you. And getting above the initial in at 87 could have been flat here. Turned back around looking for the follow through. The thing here in this case is that the smart money bias market trading call that I teach here is clearly short level 7 right now. So if anything was going to be taken today, it should have been taken to the downside. Even on a secondary end here at 85 that I called, right back here at this juncture in real time was 10 a.m. Eastern Standard. There's a gain of 5 points. If you did not get out at the limit order at 78.75 on the small up move here, contained within the channel now, but fact of the matter is the end was called in 1985 on a secondary trade at 10 a.m. and out here 10:03 at 1980. So that's 5 points. This morning, myself, 5 times 30 contracts. 5 points times $50 US is $250 gain. Times 30 contracts, $7,500 to me today. Okay, people, price continues to move to the downside. As we look into the depth, the profundity behind a real time-tested methodology, let's take into consideration the positional advantage behind it and what we can do with that. As prices continue again to move to the downside, there are a series of levels that could be laid out in advance, and prices would hit those as they did in the initial move here and continue to get out on specific rallies to the downside. Price now trading at 1975.75. Jeff Killian, CMS 718-395-9347. We'll see you on the next profitable trade. MTM 1974.25, 10:05 a.m. Eastern Standard, 2/2/2015.